Good morning, everybody. Happy Monday. Welcome back. All right, welcome back. FOMC week on Wednesday. That's kind of it. Maybe we have some drama this week. Maybe we don't. Fed is likely going to cut. I have far too many browsers up here, but let me clean those up a little bit. Let me grab the screen. Let's go. Okay, chat is open. Open for everyone. All righty. I will jump into a little income grid talk this morning. VIX gapped up a little bit. We had VIX down in the 15s, gapped up into the 16s. We're at a 16.22 VIX this morning. Highs around 16.4. That will probably be my calculation this morning. Futures up a little bit. We are at 68.91. I want to take a look at futures and see where the highs are at. 687.15 on the SPY pre-market. Highs around 689.82. Futures has a little bit further to go to get to highs. I'm going to set a chart alarm here at highs. All right. Take a look at our calendars. Pinch point. Here's our Fed watch tool. All right, here we go. Just had to clean this up a little bit. Lots and lots of stuff going on. Okay, so we will go all eyes on the Fed this week. Look at the watch tool. Australia expecting to keep rates the same. Currency strength. Last week, movers and shakers. Big move on the CAD on Friday last week. Today, pretty quiet so far. Japanese yen, Swiss weaker. Japanese yen, Swiss weak again this morning. Big stretch. This was Friday. Big move on the CAD. All right. Omar says nothing came in Telegram. As far as what? Just about today's session? Well, nothing's changed in the schedule. Not until it's holiday time. So we still have a couple of weeks of full-on trading this week, next week, no disruptions. I think next week I'm traveling next week, but not until like Thursday, Friday. So everything should be fine. And then we get into Christmas Eve, Christmas Day, New Year's Eve, New Year's Day. Mildly disrupted trading through those weeks. We might just do some spot checks versus, I don't love forcing trades in that window because everything should be fine. But in case there's like a directional drift, we might just want to consider looking at some calculated like highs and lows for the day versus forcing a daily profit play. We ran into that a little bit last year. Like, I think it was around Christmas time. We had, a couple days in a row where it's just like, why are we placing a trade? The market's just going to drift all day. And it just became like a directional play versus our, daily profit play. We're looking for prices to be relatively range bound, right? So anyway, we'll have sessions throughout the rest of the year, just have some holiday disruptions, but not for a couple weeks. Enough to get us some news to see if the market can hang in there for some fresh all-time highs. There's still some pretty good support now that we are back above the 21 50-day moving average. Everything looks pretty good stacked to the upside. I still go back to the technicals. This is a critical spot to make sure that the bears don't do too much damage below it. We could have a range, right? We could have the highs get tested and fail. That's a very obvious possibility. We could have the markets drifting higher because nothing is really there to derail it. Path of least resistance. If we break the highs, just drift into fresh highs, right? So it's not like I want to fight this. If we break 6923 SPX and we're going to 7,000, 7,000 plus, I mean, just don't assume that the market has to just immediately correct. I would expect some volatility in 2026. If we have I mean, if let's say hypothetical here, let's say that we break or hit rather 7,000. Okay. I'm curious what a pullback is to this area, just on a percentage basis, because it wouldn't surprise me to still have a correction. So correction back down to this level would be about 6%. Correction back down to this level is double that. There's 12 to 13%. Is that a healthy correction? Yes. Does that happen most, 1 to 2 years? Yes. 5% corrections are typically every year. In fact, I think I've got this. Let me see if ChatGPT is still up. Give me a S&P 500 table of corrections. How many 1% by percentages? How many 1% corrections does the S&P have? I should say how often. How often do 1% corrections happen? How many 3 to 5% corrections happen? How many? I guess I'll go 1 to 5. See if we can do this right quickly. How many 5% corrections happen? How many 10? We'll go since the inception of the S&P. See what old ChatGPT comes up with. All right, morning plan. So the market finished Friday on a high. We did push up in the morning, finished. I mean, we had a lot of very neutral days last week with the Fed on Wednesday. Usually we see a pretty calm week, Monday, Tuesday, even Wednesday morning. I probably won't force a trade on Wednesday. We've seen this happen in the past with FOMC. My least favorite thing in FOMC days is that we can place a trade in the morning, see price go perfectly sideways, like perfectly sideways for the entire morning, 9:30 a.m. all the way to like 2 p.m. in the afternoon. And price can go like 5 to 10 points. And we don't have our profit target hit yet because all of the implied volatility is stuck at 2 p.m. afterwards. So it's 2 p.m. and onwards because of the Fed. So it's still, it is profit quickly after, as long as, there's obviously no crazy direction during the Fed announcement, or, the 2 p.m. news is one way and then the press conference is another way and the market finishes with a big indecision candle. But it's also that time of year where, I don't know, maybe Powell says something the market doesn't like, right? He emphasizes that yes, we're cutting rates, but I mean, like last December, he went way off script, and the market didn't like it, and we had like a 6% correction within a couple of days, and then we had a crazy rip like right after the holidays. So just a little cautious on that type of you know move. Now, I say cautious. I could completely talk myself out of it. Could still be a winner, but I do know how implied volatility behaves during FOMC days, and when we trade in the mornings, it's it's really annoying to see that you're taking a good trade, price is doing exactly what you need it to do, and yet there is like this sticky implied volatility where the time decay isn't working the same way. Like we should be out of our trades within usually 1 to 2 hours. And if it sticks around and we have to wait all day, I mean, I'm trying to think the last FOMC we did would have been in October. It was also a big nothing burger. Both September and October rate decisions ended up being noisy candle days. But we had to sit in the trades literally through FOMC. So I traded September, October I didn't. October was still, winter. I had some members that just did the same thing per usual, standard daily profit play, end up grabbing some profit. But it's a lot of volatility to kind of like roll the dice on, you know. All right. So let's see what ChatGPT came up with. Anything? Usually start 5% plus drawdowns. So greater than or less than 5% drawdowns, 25 to 29 years. Well, I do know this. A 1% correction is 100% of the time. This is about right. I know there's like a chart on this somewhere, but I just thought maybe I can get a summary. So 5 to 10% years hitting samples. This happens. 5 to 10% corrections happen 17% of the time. Okay. 10% or more. It's only sampling 20 years. Yeah, I'll refine this a little bit. I want way more than just like the last, 10, 15 years of sampling. So cross checks. Since 1980, the S&P has had 5% drawdown in 93% of years. Well, we had that finally this year. Everyone's complaining. Yes, we had Liberation Day. Yes, the market was on peaks, dropped 20%. But after we had our April bottom, we did not see a correction outside of like pauses for 2 to 3% the entire way up. And then finally, we had that 5% correction with the NVIDIA candle. I think it wasn't even the October 10th. This candle was a 1 day sell off that was like 3+%, right? This high to low was just over 3%. So finally, after this recent top and your NVIDIA candle, there's your 5+% correction, just under 5%, or I'm sorry, just under 6%. With the NVIDIA candle sell off on the 20th of November, and then the day after was a poke of the lows, and we've bounced off those. So correction happened. I think that was a good little reset for the VIX as well. I mean, we had a lot of elevated volatility there for a couple of weeks where we were trading, high teens, 20s several times, spike up into the high 20s, spike up into the high 20s, and then we've had a pretty good VIX reset again. So, all right, speaking of VIX, I'm going to use this morning's number. Let's make sure that we're not breaching. I'll move this chart line down here. Make sure we're not breaching. If I do see the VIX go above this high, then I will adjust my high low on the day. But that's going to be a VIX around 16.4. 1.02, round up to 1.03, since it is 1.025. We are looking at a small gap to the upside, 0.19% on futures. We'll gap up a little bit. As long as we stay above 68.70, that will be in our positive gamma zone. Largest gamma is still to the highs, 68.85, 68.90. We're not that far off. I mean, 85.90 is not that far away. We're talking like literally a 20 point move. So this is not all-time highs. All-time highs are up above 69. Okay, so our trade last Friday didn't fill, right? Put in a trade. I did a 10-11 delta, let it run through the day, didn't fill. No big deal. But I'll do something similar today. We probably have a pretty quiet plus minus on the day. If anybody has a plus minus handy, let me know. I'm logging into Tasty Trade right now. Okay, and this is the overlay is a little noisy. Hide that. Okay. All right, just getting logged in. Plus minus on Thinkorswim, 2748. Stephanie, okay, thanks. All right, so Ivy ranked down to 14.4. Plus minus on SPX, 27.6 on Tasty, 27.6. Okay. Uh, by the end of the week, so 8th through the 12th, plus or minus 90.77. Again, that I mean, you can write that down, but it's like that's expected from today. That is pricing in the Fed this week on Wednesday, plus or minus. I mean, so the market's expecting it to be noisy, right? I mean, we can go up 90 points, we can go down 90 points, we can stay in the middle. 90 points for the week is a 1.3% move. So we could go higher. I mean, if we go 90 points higher, we're hitting all-time highs. We'd be creeping up on 7,000. We go 90 points lower. Does it do anything? Here's the Nvidia candle. There's some room there. I mean, if we went 90 points lower, I mean, this is 99 to 100 points. Nvidia candle high. This is where the gap open happened, and then we sold off from there. So about 90 to 100 points there as a low. I don't know. I'll just throw it out there. It's a pretty decent range, but watch this level for a potential bounce, and just shy of the 7,000 handle for a potential rejection. That would be the market maker's plan for the week. So just under 7,000, and then greater than about 60. We'll go 67.70. Okay. So for some fun, we could actually look at a like an iron condor trade above 7,000, below 67.70, and take it just like a daily profit play, but go out to Friday and see if we're right. I'm not sure what that's going to offer. It's going to be very similar to a day trade, but maybe that's a reasonable probability. So, food for thought. The 12th. If I went up to 7,000, so might have to go live price here. Some of these bid asks are off. 7,000 plus is an 11 delta. That's pretty textbook. So if I did like 10 delta, I don't know, maybe Broken Wing isn't terrible. If I'm willing to risk like 400 bucks, Broken Wing butterflies, go with 10 delta. Again, that's just like playing with market efficiency. Yes, we have the Fed. Does the Fed let the market get super directional? I don't know. Or maybe I put in like a Monday expiration versus a Friday. See if we can go out a little bit further on a Monday. That'd be the what, 15th? 15th, like a plus or minus 100 points from today. So we'll see how this changes. But just kind of thinking out there for maybe a couple of trades. 10 delta up to 70-20. So something like this with a broken wing. So buy, sell, buy. This is not a right price. This should be like offering credit. Buy, sell, buy. Yeah. This should be offering credit. All right. I don't know. I'm curious. It's like hypothetical. 70-20. So that is a 10 delta on the call side. Then a 10 delta on the put side is just below that 6,700. That's not a surprise. 6,685. All right. I might see if either one of those trades offers like $1, $1.50 of credit. Take the trade. If I get $1, I'm risking 4, but I have $1 credit and a profit trap. If I get $1.50, I'm risking 350. I have $1.50 of profit and a potential profit trap of $500. So I don't know. May consider that. This morning at 11:30, we will continue with a little bit more waterfall income. We'll have another class. We have a couple of winners that have closed out in the last couple of weeks. We'll review those today. It might be worth if we have some trades that are up like 60%, 70%, 80%, even 50%, to be honest. I think we're going to be fine. It's like we have anywhere between another 6, 7, 8% buffer and over 10 to 15% buffer on some of our trades. Probability of profit remains very high. It's just in case the market does something really silly, it might just be, well, the safe trade is takes a profit because we have like literally every position in profit. So when I take the profit and then you're on a positive note, we can certainly do that. I don't know. We'll talk about it today at 11:30 for waterfall income. Okay. And we'll obviously look for a new trade. See if I can find a good one that fits. High-low range. Yep. So I'm going to use the VIX at this recent high this morning. This is around 6:30 a.m. Around 16.4. So that's just over 1%. 16.4 is a 1.025. So I'm just going to go 1.03. Which one's this? That's just clean chart. Did our masterclass last week. Let me see. Did this one daily profit play? I don't remember if I posted the tab for ATR tracker. 12.5. Close at 6.870. In between, yeah, it was a big nothing burger today. Copy link. Here we go. So I'll add this into the ATR tracker. Section day. DPP entry didn't fill. Only showed about 60 cents credit. And I wanted $1. Okay. So we'll get our highs and lows. So closing, it was 68.70. I'll adjust the indicator here really quickly. 68.70. The yellow box will adjust to the VIX. VIX is still 16.2. I'm using 16.4. So let's take the Oh boy, what the heck? Ah, big difference. 68, 70. That was a close. It'll recenter. Okay, I'll let my VIX box reset. There we go. Now we're in the middle. Now we have our 16 plus reading on the VIX. So let me take this slight gap up and go 1.03. 1.02 to 3 is 60, 69.45. That's a 16.4 VIX. And then the close from last week, 1.03, 67.98. Okay. So again, if the VIX goes higher and breaks 16.4, you got to make an adjustment and do it both ways. If we go to a 17 VIX, then our top 17 VIX. So instead of a 1.03 high or low, we're looking at a 1.06 as far as like our extremes. All right. That's where I would be looking at like those defense trades we talked about in the masterclass last week. Okay. So 69.45, 67.98. I was talking about the range highs around like 7,000 plus as far as the market maker moves for this week, and either expiring on Friday or Monday. That's post FOMC. Okay, giving us a couple weeks to play around. All right, let's have a look at today. Bring up some gamma. So today, let's see, 70.20. I'm going to see on this trade. That's a 9 delta. See if we can get filled for a $1.50 on these trades. This is a 50. This is it's again totally optional. This is like a bonus trade. I'm not going to put this in for any official service. This is just I'm running here for daily profit play. I'm looking at a 9 delta, 8 delta combo above the 7,000 handle going out to Monday. So plus or minus 100 points. We're trading at 68.75. You know, going up about 150 points to the upside. So I mean, we again, if market makers do their job for the week, this should work. It's offering 75 cents right now. I don't want to take that. I want more profit. So if this goes up to $1.50 credit, I'll risk 350 to make 150, and I also have a profit trap in here, so I will consider that for this trade. That's a 9 delta. I'm going to put this trade in. Take it if you're interested. What? Oh my God, you filled at 60 cents. I put in $1.50, dude. Never mind. What the hell? That was so shitty. Now I'm probably going to lose like 5 or 10 cents on this stupid trade. I literally typed it in for $1.50. All right. Anyway, let me get out of this trade and do it again. Freaking annoying. All right. Let's try that again. 70, 20, 70, 25, and 40. $1.50 credit pending. Okay. And then down to the 66.90s or 66.80s. I'll go 10 delta. This is 75. Here's all 10 deltas. I will go 65, 60, and 50. Look for a $1.50 on this one as well. All right. So bonus trades. These are optional. I'll put this in the Zoom chat for everyone if you want it. I'm gonna put this in Telegram. This is for everybody if you want it. Optional trades, market makers, plus minus. Expected move through December 17th or 15th is about 100 points. So 12:15 expiration. I'm buying the 70-20 call, selling the 70-25 call, buying the 70-35 call, $1.50 credit, pending, and then the 15th, buying the 66.65 put, selling the 66.60 put, buying the 66.50 put, $1.50 credit pending. Each trade risks 350 to make 150. Profit trap potential for $5 if pinned near 70.25 or 66.60. Okay, let's type that in for everybody. I'm going to throw this in to Telegram. Okay, trades in. Again, pending orders. So looking at market maker moves going out the next Monday, let the week play out. We're below that NVIDIA resistance level. Hopefully it offers support, and we are at some fresh all-time highs with a 9-10 delta move. Not worried. I mean, not really, because this is pretty highly anticipated that they're going to cut. I think the messaging is what's really going to matter the most is what Powell says. Is this considered a hawkish cut? A super? I mean, I don't know if he's going to tilt very dovish, if he's just going to be like, look, cut, I'm out, drop the mic. I have no idea. Usually it's not a very dramatic, like FOMC is not meant to be like a dramatic thing. It's a lot of volatility. It hangs on his every word. So there's just a lot of built-in volatility, but generally it's a pretty like efficient move because it's so anticipated that market makers and liquidities are like pretty high. So like I said, I'll take my chances. And I'm going out to Monday, so it's like even if it's wild on Wednesday, as long as the market makers and the efficiencies stay, we'll still be okay. For this to work, you need to take both. No, you can take one or the other. You can take neither. You don't have to do this trade. What I'm doing, this is what I'm doing. Okay, I'm literally calling like the market high or the low. So if we go here, I'm looking to see if the market will stay above this level and stay below this level for the week, right? So we can drift to highs. We can retest lows. I don't want to see the bears pull back into here. I don't want to see the bulls just blow the top off either. If I wanted to, in fact, I'll do this instead. For $1.50, which is a decent fill, if we replace this for like, 250 and we're getting like blown out of the water, I mean, at least our risk is 1-to-1. That way we're not taking on more risk. So how does this trade get filled? Well, we probably have to test those levels, right? So I'm just going to keep an eye on this. 12-15 does not have a 70-35 strike. They definitely well, it's 70-20-25 and did I go for it? Hang on, let me check 1 second. So I skipped the strike. It's not the 35. 1 second. Good catch, good catch. We can do the proper strikes in the downside. So this is 5. Yep. So the bottom ones have this is a 5 wide and a 10 wide. So that one's correct. I might have to play with the upside. Good catch. So I can go 10, 20, 40. Maybe I'll have to do that instead. 10, 20, 40. But that's still risking way more than I want. So can I not get the freaking, I can do this. I can go 7,000, 10, and 25. That's reducing the risk a decent amount. But now that's a higher delta. It's $1,000 profit trap. Our break even would be 70-20. This would be right if I went $1. See, we can get filled for like 250 on this one. Okay, I'll make an adjustment here. So call side, remove. I'm going to change this one. So I'm going to do on the call side a 7,000 profit trap at 10, and then the skip strike at 30. And I'm going to go 250. Each trade is risking 250 to make 250. And then the pin price would be 70.10 and 66.60 there. All right. So I just made the adjustments here. It's in the, it's in the chat. In Zoom, it's in Telegram. So I did this for everybody. So this is a bonus trade for my entire Telegram. If interested, you don't have to take the trade. And will I settle for lesser credit? Possibly. If I like the trade, I might settle for like $1.50. I think $1.50 minimum. I still like the trade. Still has a profit trap. I get a $1,000 profit trap if we're in the 7,000 window. I get a $500 profit trap if we're in the 66.60 window. Okay, let's focus on today. Let's go back to the 8th. Plus minus on the day is 21.60. We looked at like a 27.60 this morning. Things are still pretty chill. Let me look at my deltas. We're right back where we started. We opened here. We're right back to center. A little bit of jostling this morning. 69.05. Okay, let's see if we get filled on a 10 delta. I mean, this pricing skew is crazy, man. It's so different. Like you're able to go much further down on the deltas to the put side. It's only trading for 70 cents. I don't want to get too skewed. I could obviously bump my put side up to 15 and try to get closer, but it's not really that big of a bump for me. So I'm going to go 10 delta and okay, let's see if this fills for $1. Okay, so we're trading about 70 cents right now. I'm going to put in for $1. This is going to be for daily profit play for members. It is the 12/8 expiration. Okay, pending order. Um, yes, I'm canceling that one, Dave, because I had more risk. The 70, 20, 20, and 25, that was a like $900 or 850 risk. So I'm making the numbers now where I'm only risking about $250 versus so I guess 750 or 850. Okay. Also had a couple of chart alarms. I want to check these. I had a chart alarm on Post last week and SATS. This was for pinch point. Do a quick spot check on these. So Post, we're at 95. This thing drops a little bit lower. Ooh. So we can shave the risk down. Let me check this one really quickly. We're dropping to some fresh lows. I think I'm going to just take this one off for a small loss. Okay, if this bottoms at all, I mean, we need price to get down below 90 in the next 11 days. We've shaved the risk down. This was down like almost $195 like last week, and now it's only down $100. I'm going to take the loss here and just take a small loss on pinch point. See if I can close this thing down for. Let's see if we get like. Well, according to this, I paid 214. Shows that I'm down 106. So I'm going to try like a 120 credit. And I'll work it down and see if I can get filled at a respectable price. 120 credit, not filling. Let's go 10 cents each. 110. 105. Okay. I will go 10-cent increments and see if I can get this to close a little bit early. All right. Got filled at 80 cents. Let me find this one for pinch point. So trade number 38, 80 cents credit, taking the loss. So that is a loss of what? 214. So $1.34. All right. So taking a hit on that one, shaving off some of that risk. That'll be for pinch point. Trade number 38. Post. 214 debit. 80 cents credit. This was nearly a full loss last week. Now reduced to 62% loss rather than hoping for price fall another 5 points or more. Okay, let's take the small loss. All right, so we shaded a bit of risk there on these, and these are December 19th expirations, which I have a couple of those. SATS, I had a chart alarm go off this morning. I'm not sure what that one is. Echo Star. Oh. Do we not have a trade in here? I feel like we have a pending order. Nope. Well, I set a chart alarm. Huh. I mean, we looked at this one for something. I don't remember. It must have been pinch point, but there's a nice little flag there, and it is, in fact, going higher. Oh, well. Okay, so price action today, still pretty chill. Uh, Positive, negative gamma right around the 68.70 zone. My call side's just above 6,900. Put side, those are pending for this morning. 68.20. So that's below the 100% ATR. Are we going to get enough direction today? I don't know. I mean, if you feel like there's not going to be enough direction, you could also consider trading the middle with an iron fly, which it's a bit more risk, but probably comparable to a, it's a comparable like daily profit play type risk, but that's just looking to see, well, maybe price will just kind of hang out here for the entire day or a lot of the day, and that iron butterfly will give you some good opportunity just to see some neutral price action. So if I thought that it could be sticky around this like 70 handle, sell the 70, sell the 70, maybe a plus minus 20 or 30. So that would be, let's say 30 wide and 30 wide. So potentially make 1,800 bucks, risk 1,200. That's, a bit wider than I want risk wise. 865 risk. Here's a five. I was like, this is similar, right? You can make up to 1,400 bucks if you're going to stay around 68.70 for the rest of the day. Let's say 575 risk max. So price is too high, too low. Price goes too high, you risk. Price goes too low, you risk. Price stays in the middle. This credit shows a lower debit. Again, the mechanical trade here is not to go after the full 1,400 bucks. The mechanical trade is to go after like 140 to 200 bucks. Take a 10, 50% winner on iron fly. That's a pretty good way to do it in the, higher risk trade. I personally don't like to do a bunch of the at the monies. I like to go out of the money. And as I say for my double up trades, it's trying to skate where the puck is going. So I like these to be way cheaper. And one of my favorite trades is, I can get this trade for, let's say if it was 20 wide, I can get the trade for like $1.50 to $2. So risk $2 to make $18. That to me is a pretty good setup. But I also have to be confident we've got some direction. Are the butterflies trades day only? No, Bill, those butterfly trades, if you're looking at that bonus, the butterfly trade is out to the 15th. So those are good till canceled. So I'm going to let those hang out. How do you get the yellow VIX window to come up on your screen? That is my indicator. This is my daily profit indicator. So if you're a daily profit member, you have this indicator. It's on TradingView. It's on Thinkorswim. Thinkorswim is not a yellow box. Thinkorswim are 2 yellow lines. I couldn't build a box on Thinkorswim, so I built this on TradingView for a shaded background. On Thinkorswim, it's just 2 yellow lines, but that's your VIX high and your VIX low. That will be pulling from the live VIX number. Okay. Anything on the VIX? We did poke the highs. We've got a high right now around 16.56. So that does adjust. So 1.03, 1.04, just a tiny little adjustment higher. Maybe by one strike. We would go 1.04 to be somewhat safer right now. So open here. 1.04, 69.46, literally 1 point difference. And then take the close from last week. 1.04, 67.98. Still about the same. So I'll try this one. You know, again, if the VIX goes higher, I should have had a chart alarm going off of VIX this morning. Let's see if the VIX goes higher. VIX goes higher, make an adjustment. Otherwise, 69.46 for the day. 69. So if that's my kind of ideal profit trap, I mean, that gets me that potential bonus. If I went 40, 45, and 55, that could give me a profit trap on the day if that fills for a buck. Again, probably unlikely that it fills, but we'll see. I will adjust it if the VIX spikes. Otherwise, if it's just a quiet Monday, let me see if I went 70, 70, 85, 55. So risking 340 to make 1160. I mean, if we're calm for today and just sticks around like that positive negative gamma, that's where we're at right now. Right in here. Right? So, you know, could we come down to 55 and 50? We could. But if it's just a big nothing day, you know, this is a pretty good spot. Like a lot of these positive negative gamma pivot points become very sticky because this is all considered a transition zone where price is just kind of feeling out like, are we going to, you know, go into positive gamma flows? We're going to go into negative gamma flows, to be determined. So the market's just trying to figure it out. Curious if I can get this risk down to under like 150 bucks or 200 bucks, I might take this trade. But I'll just sit tight for now. Daily profit play is pending. Broken wing butterfly to the upside is pending. And then the two for the 15th of December, looking at a high low. These are both 10 delta trades. So they're going to change. If price goes up, the is going to change. But I'm sticking with like that 9 or 10 delta based on opening price Monday. I'm going out a week. So hopefully, I don't know. I mean, I'm risking 250 to make 250 plus a profit trap. And I'll keep an eye on those for the week. We'll watch. All right. Any other questions for right now? Daily profit play. I mean, you have the classrooms, Van, right? Let me see if my classroom from Monday got posted. Let me go to one click trading. Give me 1 second. So we taught the class on Friday last week. I should have some more. Let's go daily profit play. Go into your masterclass recordings. I don't think this one got posted yet. This will get pulled this morning and posted. Yep. So this will be from the December 5th. This is in masterclass recording section. Okay. We should get this posted today. So, notes and a 2-day class we did on November 18th and 20th. That's a great combo class to watch. And then we followed up and did a December 5th class as well and covered, I think we had like a 2-hour live session. So we covered, all this stuff again. There are notes right here that when I walk through the sessions on the 18th and 20th, I'm taking notes in this little PDF so you can see those notes and review them with the video. Yep. I just set the butterflies good to cancel. Yeah. So this is good to canceled. This is good to canceled. Yep. So in order for those to get filled, price has to do something. We need to see price go to, 69.50, 69.70 probably. We need to see price, look like it's going to want to go towards 7,000, then we can get filled. If price wants to fall to 6,700, we can get filled. Right. So this trade, let me build this one out for some fun. Let's do option strat. I'll build that trade out and I'll show you what it looks like. So building out a couple of butterflies. So put side, we'll go SPX to the, 18th? 15th. 15th. And then put side is 65. So I'm buying the 66, 65. Selling at 60. And then skipping to 55. 50. 66, 65, 66, 60, and 66.50. Broke wing butterfly. Got it. Now I will add in my buy call, sell call, and buy call. And that is at 7,000. So I buy the 7,000. I sell the 70.10. And I skip to the 30. Or is it the 25? 25. There we go. All right. This is what the trade looks like. So price is here. There is some natural skew in the market where the put side has a little bit more, distance, but I'm basically doing a 10 delta on both of these trades. Okay. The call side, since I lowered it, the call side is a little bit higher. This is like a 12 delta now. I'll double check that. But we went a little bit higher. The actual strikes around the 70, 70.10. Let me look at that strike. So December 15th. And the 7,000. So it's a 9 delta. I mean, I'm where I want to be. I like the 10 deltas. Okay. My question on this trade that I'm just asking myself here is, do I think this trade can get filled for $2.50? Honestly, no. I think that what I'm probably going to have to do is adjust my credit. More than likely, I think if this trade offers $1.25 or $1.50, it's still a good trade to take. But I will worry about that if I see that it's literally trading for like $1.50. And then I'll say, all right, well, if I want the trade so badly, I can take it now. I'll adjust my credit. But as it sits right now, this is a much more favorable reward to risk because I'm not risking anything more than what I can pull in for profit. Okay. Right, but then I adjusted it. Did I? What the heck? 7,000, 70, 10, 70, 25. Did I not adjust it? There. 7,000, 70, 10, 70, 25, 65, 60, and 50. So that way my the broken wing side is 15 wide. Thank you for catching that. And this is 15 wide. So 15 wide. This one is 10 wide. Okay, the reason I'm going 15 wide is because I have a $10 profit trap. Okay, so the 7,000 by 7010 is a 10 wide profit trap. The risk is 15 wide. And then if I go in for 250 credit, I'll explain this as far as the risk goes. Okay, this one, I have a $5 profit trap and I go 10 wide and I still take on the 250 credit. So how does the risk work? Well, if I'm risking 15 with a profit trap of 10, okay, and another credit of 250, what's my risk? 15 minus 10 is 5. 5 minus 250 is 250. Max risk. Okay. So this trade is risking $2.50. This one, if I have a 10 wide minus my profit trap minus my 250, what's my risk? 250. So both trade is risking 250 bucks to make 250 bucks. The call side has a potential $10 profit trap. So I can make a little bit more on the profit trap side. This one has a profit trap of 500 bucks. So when I do show this trade built here, okay, that's why my profit trap on the call side is a little bit higher. Oops. So this is a $500 profit trap. This is a $1,000 profit trap. They both have the exact same risk. Okay, and again, this shows net credit of 50 cents. That's not accurate. So the risk is actually smaller. The risk is like 250 bucks. There's my risk. So I'm shaving the risk off. And I still have my profit trap. And inside of this, I'm looking for, I guess I'm just going to redraw this, but there's my risk. There's my profit trap. I'm asking for 250 credit. There's my 250 credit. There's my $1,000 profit trap. There's my risk. There's my 250 risk. That's what it looks like. So if I'm right in any way, shape, or form, whether we stay in the range bound, one trade gets filled, one trade doesn't, this is all green in here. Okay, so all my profit is in this area. Everybody follow me? Okay. And while this trade is pending, if we get filled on this trade, do not assume that, oh, we're trading at 70.10. That's a profit trap. That profit trap isn't official until expiration. Okay. So if price hits this low or this high before expiration, that's not a great thing. You can get filled. You can take on the risk, but we want to see that price is going to, react off that bottom or react off that top. Because ultimately I want price to settle inside the range, right? If the markets are going to be efficient, hopefully they respect those ranges. Okay, and I've reduced the risk a little bit if I change the color down here. So my risk is 250. So there's my risk. There's my risk. Like that. But the call side, because of the way the strikes are positioned, it does offer a better profit trap, but I'm moving my strikes down at the starting point of 7,000 versus like a 70-20. When you say expiration, would that mean sell? I mean, maybe not that tight, Christian. I would say maybe within the last 60 minutes. The last 60 minutes. So like 3 p.m. on the 15th would be like, yeah, if you want to manage a profit trap. So here, I'll show you. If we take this trade into the final hour. Okay, so the final hour. Look at the difference in profit trap. If we're in the profit trap on the call side, this thing shows a big fat. I mean, what's crazy is in the final hour of Monday the 15th, our call side could be showing up with a $500 profit trap. If it's anywhere between like 7,000 and 7010, or even above 7010, we could still have a nice fat profit trap in the final hour. The put side doesn't really give us any profit trap until we get very, very close to expiration. So if we went to 310, look at the call side versus the put side. 330, look at the call. I mean, you can just see, but the put side is at least cooperating, and it's in that final like 30 minutes you start to see a profit trap. And that's probably how I manage it. The final 60 minutes, the final 30 minutes, final 15 minutes, but the call side is actually offering up a better profit trap opportunity as we come in like late into the trade as far as close expiration. So yeah, you're right. I mean, it's going to be managed at the end of the day, but like I said, final 60 minutes is usually like my window, and then it gets really nice in the final like 30 minutes, and then it gets even better in the final 20 or 15. Um, and the roll the dice and hope for the jackpot is you got to let it cash settle, which I don't. If I've got profit trap opportunities, I'm not going to sit and let it cash settle, right? Like if this is even offering, the 250 credit plus 100 or $200 bonus, I'm going to take it. If this is offering the 250 credit and a two, three, $400 bonus, I'm going to take it. There's no way I'm going to sit here and try to hope for like a perfect $10 profit trap or perfect five when it's like if I'm winning the trade, I'm going to take the profit. That make sense? All right. Let's see here. Okay, we'll have that masterclass posted for Daily Profit Play in about 15 minutes. I just got confirmation. So the masterclass we did last week will be posted November 18, 20 is a good combo class with notes. And then the December 5th, it'll just be, thumbnail of me, timestamp December 5th, and it'll pop up here in about 10 to 15 minutes. Just refresh your classroom. Cool. All right, let's do this. So waterfall income class is coming up today at 11:30 a.m. Eastern time. I want to do a quick review of these positions. We have we have some open positions. They should be showing some profit. This one is up 80% of max profit, not bad. This one's up 85% max profit, not bad. These are two additional candidates like 6140. Not a bad. I mean, I might just take the profit. Here's another one that's 6140. This one's up. It's like if we want to just clear some profits, we can clear some profits. There's a couple that I probably won't touch. Like down here, this is at 5,800. This one is like, this one's not bad. It's up about 40 to 50%. 6,390 is still a relatively high strike. There's a 86% chance profit. But look, this one has a 97% chance we still make full credit on the trade. This one has a 98% chance, 99 and a half, 98, 99 and a half, 99 and a half, 99 and a half. So for these trades that are, 99.5% chance of profit, if you want to take it, you can. But if you want to hold it, there's less than a 1% chance, again, based on current volatility, which we know can change. That is the only risk we're really taking here is like if volatility jumps and the market dumps, then these trades are going to show some risk. Okay. Even though we're still 700 points away from current price. But because the VIX can change that aggressively, all of a sudden the expected moves get blown out, and this might show some risk, even though the percentage or probability of profit is very high. So this is what we'll talk about today in class is we're sitting on a lot of profit right now. What do we do with it? Is it time to manage it? Is it time to, embrace a little bit more time in a trade like this that, is 99.5% chance where 57.20 is our strike? It's so far down there. But, it's also a very good discussion to have. And there could be bigger problems for us as traders. It's like, well, okay, I'm sitting on all my positions are all for profit right now. Question is, do I take the profit? Right? David, should I take? I mean, no, you're not going to get these trades. If you take these trades, you're not going to get what we got. Credit wise, like you're not going to get the same trade. So no, you can't go out, 30 days and pull in 50 to 70 to a dollar credit. We took these trades originally at like 60, 70, 80-day swing trades. Um, so I mean, as always, like we trade waterfall income week to week, right? So there's always a new trade to look at. Like look at fresh trades today. Okay, but these are good problems to have. We've had a lot of successful trades. Let me go into my tracker here. So we do have some open positions. Our win rate is 96%. Waterfall income, we've won 96% of our trades. Not too bad. Have we taken losses? Yeah, we've taken a couple losses. But this to me is like one of my most flexible strategies as far as weekly income. Um, when I'm cautiously bullish, this is a pretty good way to participate. When I am, I did literally the last couple weeks, I've done 6 years of testing. Here is a look at it. Let me see if I can find it. I've talked about my income grid. Let me stack in here. That should be for the week. Yep. Okay, so I know this chart's a little messy. Basically, I'll clean this up. So if I went, well, I can explain. Income grid. I've teased this a little bit. This chart gets really noisy. This is why I'm building a tool because this chart looks so hideous. My income grid is week after week. We are in a bullish environment where my short-term trend is bullish. Okay, so easy way to see that is this is why I was cautious the last couple of weeks is we rolled over here, so I wasn't super bullish, right? This is an indecision zone for me, so I stayed out. Once we got the crossover, price is back above, then we're bullish and we resumed. So we're still in a bullish trend. All right, so this is why I'm building a tool that will give us the best opportunity for path of least resistance. We are bullish here, and this is like confirmation one. And then confirmation two is shortly after. Here's confirmation two. Number two. So short term, long term trend is up. We focus and participate on just being bullish week after week after week. And it works. Okay. Now, what's crazy is, the guts and the tool that I'm building. I'm looking for that one-to-one reward to risk, which week to week or month to month or quarter to quarter, I've got it priced out where we can be as active or as passive as we want to be. Personally, I like the weeklies and monthlies. Quarterlies are a bit more passive. I'm way more active than that. I mean, quarterlies, like if I just looked at my charts once every 3 months, I wouldn't consider myself a trader. I'd be an investor, but I wouldn't be a trader. So, I'm usually daily, weekly, monthly. So we have these volatility levels in yellow. Okay. So that's kind of running in the background. And then I have my short term in a short term and let's say long term confirmation to see what's our path least resistance. So even right now, as long as price stays above about 67 20 or so. If we stay above 67.20, that's a good thing. That keeps this trend in check and intact. Okay. So from current price, could we go higher? Yeah. And you want to stay, when you're in a bullish environment, you're just focused on these grid levels. In a bearish environment, you'd focus on these grid levels. But what's kind of crazy is, and I'll just ask your opinion, would you rather trade the market up and down, right? So you trade the market up, you trade the market down. So every time we have bearish alignments, you're doing bearish spreads. When you have bullish alignments, you're doing bullish spreads, and you win about 65% of your trades. Okay. Or you can just trade the market bullish only, which means you trade bullish only. When the market is indecisive or bearish, you just don't trade. And you win about 71% of your trades. Profit factor here is about 1.85. Profit factor here is about 2.15. Okay. Both of these are defined risk. Everything's defined risk. And just by the numbers, you get obviously a lot more trades. I mean, our win percentage was down to 65%. You still, with a 1-to-1 risk, you're still making money, a decent amount of money. You increase the win percentage, increase the profit factor, and you're taking, I don't know, there was like 100 or so less trades over the course of 5 or 6 years, which to me doesn't really matter. It's like quality over quantity, right? So anyway, I've got the results. It was a entertaining couple of weeks to get those things all tested out. Captain's Waterfall's been the best on IRA or the IRAs. Yeah, IRAs, regular accounts, easy money. Yeah, yeah, it's good income. So Waterfall's been great. And if I've got some traders that are interested to see more, um, waterfall income, what we're doing with it is we're typically index swing trading. Okay. So 118 live trades, over a 93% win rate, and our average return between winners and losers is about 16% return on risk. Typically, we're going after it's right around. This is pretty much statistically accurate for a 12-year study, as well as what we've done the last year plus in the service. A 15 to 20% return on risk. Okay, weekly swing trading. Weekly swing trading, income on an index. Okay, so that's what we're doing. And it's been like clockwork for the last year and a half with the service. Is it perfect? No, let's be real, right? There will be losers. This isn't some black box miracle system. This isn't self-learning machine. It's like this is taking a 70-year phenomenon on the market, 50-year phenomenon on the market, giving us an edge and focusing in on the edge. We do take a little bit more risk than we have in reward on these trades, but what I do like about this is I'm giving myself plenty of room for error, plenty of room for error. And I take 2 core strategies with this one. So strategy 1, strategy 2, we teach this class very regularly, probably between daily profit play and waterfall income, 2 of my most recurring masterclass series, just because they have a lot of traders in them. And I've made some modifications to help us, have better trades and just explain everything like comprehensively where, why do I have 2 strategies versus just 1? Well, because I want to give myself the flexibility to trade better, right? If I just did 1 trade, that's okay. But having at least 2 strategies within the service helps. Having daily profit play now with like the core daily profit play plus our defense trades helps, which means I can reduce my risk, still have a high probability profit, and just continue to collect some income. Okay. All right. So waterfall income to me, this is one of my favorites. I mean, I've seen a lot of stuff here. This is going on 26 years in the markets. So I've certainly seen a thing or two. What we've seen in 2025, I mean, to be fair, like 2025 has been a pretty wild day or wild year. Despite the the rotation in February, the sell-off in March, the Liberation Day drama in April, the market proved resilient. You can look back and say like this could be one of the more hated bull markets we've seen in a while, which is kind of funny. It's like, I don't think anybody should ever hate a bull market, but I said it like when the market was dropping in April and I was selling premium and, we found a nice low around like, this is around 4,800. It's like 4,880 on the XPX. I knew that if we bottomed out there, like there's a lot of money to be made to the upside. But I said like within the first couple of weeks of that bottom in April, that I'm like, if we get back to all-time highs, this is going to be like the most unnecessary correction this market has had. And it proves to be right. Like, what a silly reason to pull back 20%. Like, it was immediate, it was ugly, it was nasty, and then it was over. And here we've spent the last like 7-8 months doing nothing but melting up and just kind of preserving that this market, can't go down now. So anyway, governments have become pretty reckless. China's printed money out of thin air, just like we do, back in the real estate market, stock prices. Eurozone spending for the first time in a decade. They're doing a lot of defense spending. They're trying to get their energy prices in order. The U.S. debt is skyrocketing. We've got heavy fiscal policy as well as now accommodative monetary policy. So, there is a risk of higher yields, stickier inflation, and global PMIs going up. Now, this tends to still be good for asset prices, just so you know. So if you own assets as in trading the markets, owning assets as owning companies, participating in an upward drift. This is a good way to do this. We should use this stuff to our advantage and take advantage and use this as an income opportunity for the markets to have no choice but to go higher. Okay. But the cost of food, the cost of energy, the cost of living, the cost of life, we know for the last 4 or 5 years, people have been feeling that pinch for a while. So, I care about my family's financial future. I know you do as well. So pay close attention. Here is an income technique that can help you handle the rising cost of living. We've had a lot of winning trades together in this service. We have 110 winners locked in out of that 117, 118 live trades. We're looking for 111th winner. Literally, when I go into class today, we could probably take our 111th up to like our 118th or 19th trade off the table and have all these winners locked in. Okay. But based on percentages and probabilities and margin for error over the next like 30 to 60 days, I might keep some of those trades running a little bit longer. So I want you to think about this for a moment. We're going to talk about if you could target about $1,000 per week, making about 20% return on capital, right? 20% return on risk, about $1,000 a week. If you're willing to take 5K risk, make it about $1,000 a week. If you're going to risk more, you can make more. If you're going to risk less, you can make less, right? But it's scalable, about 15 to 20% return on capital. And this is one trade on one ticker, same time each week. And I do mean that pretty literally. When I say one trade, one ticker once a week, here's March 4th. Show up and trade with me, live session at 11:30. Trade gets posted by 11:59 a.m. Shut down the computer for the rest of the week. When everything works out, income. $5,000 risk, you have 1144 in income within a few days. Okay, March 11th, same time, same place, like clockwork. A few days go by, trades automatically closing out for you with profit. $5,000 risk, 1186 in profit. Very next week, March 18th, rinse and repeat. 5K risk, 1297 in profit. Final Monday, no different. 5K risk, 1150 in profit. Even though the market went down, it didn't matter. Altogether, that's around $4,800 of profit during the month of March. One trade, one ticker, same time each week. These are my weekly windfalls. This is part of my waterfall income class. They have shown the power to pay us even when the markets go up, down, or sideways. We can still get paid. Okay. 12 years of data, 97% success rate. That silky smooth equity curve, bottom left, top right, manageable drawdowns, expected profits, high probability profit every single trade. That's what we do. So what's that look like? Well, if you have 100 trades, which we do have 100 trades, we've won most of them. So it's like winning 97 out of 100 trades. Now, to be fair, those losses, if I take a loss, it's going to set me back about 5 or 10 trades, just to be fair. Okay. But that is the trade-off of having a slightly higher risk than reward setup. If you want to win, 95, 96, 97% of your trades, you're typically going to take a bit more risk versus reward to have that high probability. But it pays really, really well. Okay. So this is why I'm excited to share it with you. This is why we trade every single Monday together. And I want to be clear, there's nothing guaranteed in the markets. I'm cautiously bullish right now. I think that the market could do something very silly and disappointing into the end of the year. I hope that it doesn't. We're up around 14, 50% year to date for the S&P. I'd like to see it stay there truly versus the market like dipping to be like a single digit. Let's say the market falls just in the next couple of weeks before we get into the holidays. Let's say the market falls back and we're down like single digits for the year. That would be unfortunate to finish the year that way because we were up, testing that 7,000 level in the S&P, getting up to 15, 16% year to date. NASDAQ was, sniffing 20%. So I'm hoping that the market just kind of stays in this positive drift. We've got some good technical alignments. We've got some tailwinds. We have a bit of a weakness window right now because of mutual funds and things like that with distributions and tax events. But if the market isn't disrupted, we should just see at least these levels or slightly higher going to the end of the year, right? This trade technique is not about gambling on home runs. This is not a huge, ridiculous risk. This is a realistic approach that's going to help us give us as traders an opportunity to target income every single week on a weekly basis. It doesn't matter if you have a multi-million-dollar retirement account. It doesn't matter if you're just starting out with a couple hundred or a couple $1,000s. Anybody can learn this, and I have been teaching this strategy to traders all over the world. So brokerage account, permission trade options, connection to the internet or your broker app, and just a couple minutes with me each and every Monday. So I try to make it as easy as possible. If you want to join me, it's a great time to do it. If you'd like to join me for class today, we're trading today on a Monday. Okay. If you're watching this as a session later, if this is, recording that you're watching in the near future, we trade every single Monday like clockwork. So if you're watching this session on a Thursday, you're going to join me for a Monday live session every single week. And this gives us a chance to target our income, whatever that risk reward may be. We're looking at about 15 to 20% return on capital, essentially hands-free. So stick around. Welcome to Weekly Windfalls. Like I said, I've been in the markets for 26 years now. I manage some capital. Options, I think, is the best tool in the world to trade. It has changed the way that I trade my entire portfolio, manage my assets. For the better, certainly for the better. My risk-adjusted returns are as good as they've ever been. This year with the market down 20%, my peak drawdown is about 6%. I've got accounts that are pushing 40% for the year. It's pretty good. Like down 6%, up 40%. That's pretty good. Options allow me to do that. Okay. Plus, you're here and joining me every single day live. And I do this stuff live, real money, no funny money here. So my top followers make a killing. Ken and Kathy, Randy, Lynn, Dave, Mike, Mark, doesn't matter. A lot of traders. I'm revealing a banner technique that maybe you've never seen. If you want to check it out, it's a great time to get in class. We do this stuff every single week. Okay. Is there a get rich quick button when it comes to trading? Well, some will tell you that there is. A 5x leverage ETFs might help, but I think they just got shot down. So you'll have to settle for double and triple leverage ETFs. Unfortunately, that's just playing with fire. You don't need leverage to make money. Okay. Leverage is a very slippery slope. It's nice when you have it, I guess, when it's working for you, but it is equally as painful, if not more painful, when you're on the wrong side of it. So anyway, point is, when you see out a place to trade today, or you're in my live sessions for waterfall income, don't over-leverage yourself. These are designed to grow accounts over time and do it consistently in very risk, kind of a risk off tone, right? Like I want safe, reliable income. So the timing of this initiative couldn't be any better. We get this, young or old, a lot of people are strapped for cash thanks to inflation. This is what I've been saying for the last 5 years. Everybody knows stuff is expensive. Life feels more expensive. The K-shaped economy is very real. Okay. Whether it's an uppercase K, lowercase K, bottom K, it doesn't it. You're somewhere in the middle. You're either on the top of the food chain or you're struggling to get by. But I admit everything is more expensive. Okay. So a lot of Americans barely save any money. Savings rates have plummeted. Credit card debts are sky high. Auto loans, blah blah, like student loans, like all this stuff's happening. Like the consumer is getting pinched in a big way. Okay, and the labor market looks a little bit rough as well. So with credit card debts up to $1 trillion plus, a lot of the stuff that people don't want to deal with, like anything for your dog, gifts for loved ones, putting on a credit card, trapped with credit card debt, worst debt you can have. I don't even know how it's legal to have financing is 23%. It's insane, but it happens. So I'm on a special mission, unlike anything I've done before. Let's talk about how we can offset this rising cost of living. Let's talk about how we can use the markets as an income tool to help, build our accounts, trade with some confidence, improve our process, make money consistently, placing one trade, one ticker at the same time each week. March was all winners. April, you have the same 5K to play with. This is what we're referring to today on that 5K risk. You can take these trades for as little as $60 to $100. That's my strategy 1. You can take these in a very cost-effective way. Strategy 2 is buying power between 500. You can do buying power whatever you want, but typically my buy power is $500 to $1,500. So anyway, point is, April 2024, the market had its big shakeout. It was down about 5%. So watching, if you're just in a portfolio buy and hold, you're down 5%. Every asset in 2024 in April sold off. NASDAQ's down 6%, S&P down 5%, Bitcoin and bonds double digits. Okay. Most investors are staring at red, hoping the market's going to come back, not knowing what to do. If you took advantage of weekly windfalls every single week like clockwork, you not just hit one winner, not two winners, but literally every Monday while the month of April was falling, you still made money. Okay. $1,054, $1,166, $1,639, $1,153, week after week after week with that same 5K risk per week. So it's over $5,000 of profit while most investors are staring at huge drawdowns. That's one trade, one ticker once a week. Okay, let's talk expenses here. This math is a little nerve-wracking for, this is where most middle class and the bottom of the K is struggling, because you've got about $73,000 in expenses per year with the annual household income at $74,000 or $75,000. Okay, and that's just talking bare necessities, taking care of, healthcare, daycare, food, transportation, clothing, electricities. Okay, That's before taxes, obviously. So how does this math make sense? Your gross income is around 75K. Your fixed expenses around 73K. This is why people are, tapping into home equity. This is why people are living on credit card debt. Not good. This is why people are struggling to save for retirement. The dream car, the dream home, the dream whatever. It's getting pushed away. The American dream is unfortunately slipping away for a lot of people right now. That's not cool, but it is happening. So cash is tight for a lot of folks. But with weekly windfalls, we can get some income that we desperately need, desperately want, and deserve right now. Do we need a second job? No, you don't. I've said this for years that trading is the greatest side hustle in the world. It truly is. So learn how to take advantage of it, learn how to make it what you want it to be, which is understand your risk and reward and do something that works and have fun in the process. So keep in mind that, April sell-off, we still made $5,000 during one of the worst sell-offs we've seen for the entire year. And everything was red. Everything was down. S&P, NASDAQ, Bitcoin bonds, all down, right? So I can't guarantee any future returns. We get it. The market can be unpredictable at times, but what gets me excited about sharing weekly windfalls is that it's steady, consistent, reliable, and it's not a terribly difficult trade. Okay. We can target, the income with one trade, one ticker, same time each week. First week in May, after the April sell-off, we still made money, by the way, 4 weeks in a row. Then we had a May rally, which got us back to break even. So if you're a buy and hold investor, you're just back to break even. If you're a waterfall income trader, you had 4 winners in March, 4 winners in April, and 4 winners in May. Even though the market was up and down and up again, as a break even trader's buy and hold, you actually had 12 winning trades. Okay. So if you did weekly windfalls in May, you had another 4 winners in a row. 1150, 1209, 1101, and 1672 with that same starting stake each week, going 4 for 4. Okay. Silky smooth equity curve, manageable reward to risk. If you're twice as confident, yes, traders do this in my services every single week. They put in whatever it is. Maybe it's 10K a week. Well, that 20% return over the month generated over 10K in extra income. Not bad. Enough to beef up, the savings account, have the rainy day fund. We get it, right? People aren't strapped for cash because they don't want to save money. It's because cash is tight. Things are expensive. So it is becoming very difficult and nearly impossible to save money. Car payments almost doubled. Insurance almost doubled, right? Nearly $300 just on the car payment itself. Auto financing, not cheap. Price for the grocery store, highest rate in decades. This is where we feel it. If you have a car, if you're trying to buy a house, if you're at the grocery store, that's where life is most expensive right now. Services we pay for, probably most expensive. Okay. I mean, it's funny how you give like child tax credits. So what does daycare do? They automatically adjust their prices to ask for more money, right? You get an extra, $1,000 per child or $1,500 per child. Well, your healthcare cost or your childcare costs just went up by $1,500. Same reason for EV credits. What do they do? The sticker price of those cars, jack them up to basically offset the rebates. It's stupid how that works. You think you're saving money, but you're not. Okay. Average mortgage almost doubled. Like this is a weird time that we are in. I think most people remember what a weird, frustrating, polarizing window that we've had the last decade. Okay. So problem is this is only beginning, and we're not going to be saved by the Fed. We're not going to be saved by Donald Trump. We're not going to be saved by the government. There's just honestly, crisis probably fixes some things, but nobody wants to experience it. We are literally avoiding crisis. We have been, we have the tools, resources, the levers to avoid recessions right now. And the fear is that when we have those tools, resources, levers that no longer work the same way, they're not as effective anymore, that's when things could get very, very ugly, right? But if prices are going to be higher in the coming months, if our inflation rates will not go down, things are going to get more expensive, right? This happened back in the 70s. This is Richard Nixon, Arthur Burns. They ran the economy hot. We had a wave of inflation, cooled off, and then a second wave that lasted even more years. This is when Paul Volcker stepped in and crushed the market. We had a nasty recession in the late 70s and 80s. Okay, so what happened during COVID? Well, we shut the entire global economy down for a month, and then we come back online. People have jobs. People don't have jobs. People are quitting, leaving, doing whatever they want. It was good for the worker, right? Workers could go and get paid because they were struggling to have people fill these shoes. Now we're at a point where people are getting laid off, and we have some, kind of pandemic-like employment numbers coming out, and it's not really encouraging. But the inflation has not gone away. It's not, crazy high. Obviously, supply chains have gotten back in line, but are we going to see like stickier inflation? Could we see a higher number coming? Could we see inflation creep up to 3.5%, 4% again? Maybe, right? So unless your wages are offsetting that, unless your investments are offsetting that, unfortunately, people continue to fall behind, and that K-shaped economy gets even bigger. So if the cost of living goes higher, some economists suggesting that we could see up to $20,000+ in added expenses every single year. Yikes! Nobody wants that. So I'm looking for ways to offset that ever-rising cost of living by one trade, one ticker, once a week, like clockwork. I have traders all over the world in this service. You can do it from anywhere, on your phone, on your tablet, on your computer, anywhere in the world. I do this every single week. All major brokers do it. If you have permission to trade options, you can take this trade. We can target whatever income is reasonable. Obviously, if I'm risking 5K to make 1,000 and I want to risk 5K, don't risk less. You can risk 500 to make 100, right? You can risk 100 to make 20. So whatever you want to make the strategy, we can make it work. Okay. So March profit, April profit, May profit. Here was it sell off in April. We made money. Here's a rally in May. We made money. How about that rally in June? We made money. Another 4 for 4. Another month without a single loser. 1250, 1000, 1000, 1044 on that same 5K stake each week. There's nearly $4,300 in extra income for the month of June. Is it life-changing money? Maybe yes. For some, barely noticeable. For others, like it's moving the needle in your day-to-day life. Catch up on some bills, replenish your savings, enjoy the process of trading a little bit more. Understand what it's like to have a consistently profitable strategy. Even surprise the family with the weekend getaway. So just to recap, we're talking about 16 trades here, all winners, back to back to back to back to back, just showing up and trading with me every single Monday like clockwork. Okay. If we're hitting that, if we're hitting the $1,000 a week goal, or let's say we're putting that 5K risk in, we hit that $1,000 a week goal, just over these trades alone, it does have a huge impact over time. Because on those 16 trades, 4 months of trading, 4 weeks every single Monday, okay, almost $20,000, $19,297 in 4 months. You throw that out through the entire year, you analyze it out, you're looking at nearly a $60,000 bump. I mean, that's like getting a raise at work, right? That's a great side hustle. How many just got a $57 raise last year? Probably not very many people, right? But if it helps, plus we have a bunch of winners. We've done this live for 110 winning trades, like clockwork. So you might be thinking, could we even lose? Yes. Did I say I'm 100% winners? No. We had a nice win streak. We had this service winning, I think, 40 plus trades in a row without a single loss until we took our first loss. And that was December of 2024 for, a manageable, like $300 and some risk. That's what I lost. But nothing's guaranteed, so do not invest more than you can afford to lose, and understand the reward and risk before you ever place a trade. Do I want to place losing trades ever? Of course not, right? There's a risk cutting trick that I'll share with you today in class. Weekly windfalls and waterfall income is truly the safest way that I've seen to consistently target extra income week after week. First Monday in July, 1044. After that, 2377. There is a way to take advantage of stuff using the options market. Okay. So you hear the word options. Some people think are options risky. And to most people, yes, because most people use them probably in like an improbable way. They don't realize it, but they'll just discover like, I take all these trades with call options. I take all these trades with put options, and I lose and I lose and I lose. Why? Well, let's flip it around. Most people think of buying options about speculating, right? Buying options can be risky because it's how you leverage large sums of money, hoping that the stock will move the right direction, okay, over a certain period of time. You need the price to move pretty much immediately